Live from Bloomberg's World Headquarters in New York, I'm Julie Hyman.
And I'm Scarlet Fu. We're 30 minutes from the close of trading here in the U.S.
U.S. stocks little change today with the post-election rally halting ahead of the Christmas holiday.
But the question is, what'd you miss?
Closing the books on a major dispute, Deutsche Bank and Credit Suisse both announcing settlements with U.S. regulators. And defense stocks are trailing after President-elect Donald Trump's tweets yesterday. We're watching Boeing and Lockheed Martin. Turing Pharma founder Martin Shkreli unleashes on the drug pricing debate. So how does he think President-elect Trump will take on the issue? That is ahead. Let's look at where the major averages stand as we head toward the close. We've got really little change here. Volume, of course, is down as well. Bloomberg's Abigail Doolittle is standing by.
You're right about all of that, Julie. Not a lot of action for U.S. stocks. Heading into the close really all day. We take a look at the three major averages, the Dow, S&P 500, and NASDAQ. We see that each is basically unchanged. Mixed trading at this point all day. The three major averages have been flipping between very small gains and losses. On the week, though, it's worth noting they are up. The Dow for the seventh time in a row for its longest winning weekly streak since December of 2014. So some strength there for the Dow. As for two stocks that are in the news today, we're looking at Boeing and Lockheed Martin. This after President-elect Donald Trump did tweet yesterday that he thinks that Boeing should offer a cost-effective competitor to Lockheed Martin's F-35. Now, initially, this did cause Boeing to pop higher and Lockheed to drop. We're still seeing a little bit of this, although that pop is very slim for Boeing, and it's actually been trading in mixed fashion today. But as analysts have weighed in, including one military analyst, Richard Abulafi, he's saying that it's, quote, bizarre, late to the game, and irrelevant, while J.P. Morgan is saying that the F-35 is here to stay. So it'll be interesting to see how all of this shakes out. And very interesting about these two stocks out of the election. We hop into the Bloomberg and we take a look at #BTV 1318. This is a chart of both of these stocks, Lockheed Martin in blue, Boeing in white, since the election. And what really stands out is the fact that Lockheed Martin soared higher right after the election as investors thought that Donald Trump's defense spending would be big. It would benefit this company. Boeing, a steady climb higher. But now we're seeing a bit of a reversal there, which is really pretty interesting. It'll be curious to see whether or not that reverses in the year ahead. Some are thinking that the Trump trade could reverse. But right now, we do have Boeing up more than 10% since the election. Lockheed Martin giving up most of its gains since the election, but still up about 4%. And as for defense spending, this is another great chart in the Bloomberg. This is #BTV 1034. And this is the U.S. budget for defense spending. We see a long-term uptrend. But since Obama has taken office, we are seeing a bit of a dip, about $200 billion lower than the high. And this chart may suggest that this could come down, in fact, to the long-term uptrend. So perhaps we've seen so many reversals of expectations around President-elect Trump and what he could mean for stocks, the markets. This could be just another area that will not be as investors were initially thinking it would play out, Julie and Scarlett.
All right, another unpredictable consequence of the election. Thank you so much, Abigail Doolittle. And as we just heard from Abigail, Donald Trump appears to be pitting two iconic defense companies against one another. He took to Twitter to say that based on the tremendous costs and cost overruns of the Lockheed Martin F-35, I've asked Boeing to price out a comparable F-18 Super Hornet. And of course, this is not the first time Trump has tweeted about Boeing and Lockheed. Their shares, as Abigail was telling us, has been moving in different directions since the election. Joining us now from Princeton, New Jersey is George Ferguson, senior defense analyst for Bloomberg Intelligence. And in Washington is Alex Wayne, White House editor for Bloomberg News. George, I want to start with you here as the defense expert, looking at how Donald Trump has kind of positioned himself here. It's a little bit unexpected given that people thought defense spending would increase, yet here he is pitting companies against one another. What is his strategy here?
Yeah, I don't think it's necessarily the case that defense spending won't increase during Donald Trump's presidency. I think, though, what we've seen here that's the surprise is that he's really pushing defense companies, I think, to provide more value. I think he realizes there's a lot he wants to get done over his presidency. There'd be a fair amount of spending. There might be a stimulus package. There could be tax cuts. On top of that, I think he actually wants to grow defense spending, but I think he's looking for more bang for his buck. And so I think, these companies, I think it's great to get them to compete against each other and deliver products at a lower cost. There has been a lot of competition in the industry lately. And so I think that's his real drive, is to try to get as much as he can for the dollars he's spending.
And Alex, when you look at the past administrations and their positions on defense spending, have we seen this kind of scrutiny? Is this one of the spending areas in Washington that is seen or has been seen as needing attention and needing cutting?
I don't think there's a member of Congress who's ever lost his job after promising to increase defense spending. It's an easy position to take in Washington, unfortunately, and too seldom do politicians here consider whether defense spending really needs to go up and whether we really need all of these new advanced weapons, fighter jets, ships, nukes, bombers. It's Donald Trump is well in the vein of his predecessors here in Washington.
And indeed, on the topic of nuclear weapons, Trump has also tweeted about that in recent days. And these are also, by the way, weapons that these two companies that we're talking about are poised to perhaps submit bids on. Talk to me a little bit about how this maybe breaks with what we have seen on recent policy in terms of nuclear arms.
Sure. Well, usually the United States makes its nuclear weapons policy in fairly dense documents issued by the Pentagon. Here we have the president-elect appearing to restate U.S. nuclear posture on Twitter. It is, I think, reasonably alarming some of our allies and our adversaries and proponents of denuclearization. So it's unheard of, for sure, and I think rightly disturbing to some people.
George, you had mentioned that the president-elect wants to get more bang for his buck, and that might be the motivation for him pitting these two companies against one another. As Julie mentioned, though, nuclear armament may be an issue that he will be grappling with. Give us a sense, as you project that our defense budgets will likely grow, where that spending will go to. What areas does Donald Trump want to spend on?
Sure. There's a number of areas that have actually been underinvested in the last decade. So I think what you need to remember is that we just came out of wars in Iraq and Afghanistan, where we spent a lot of money on the Army and Marine Corps and basically land forces. And a lot of the products that we build, Navy, Air Force products, are longer. They take a longer time to bring to the force, and they haven't been renewed in some time. And so one of the areas in nuclear is the Ohio-class submarines. They're made by Huntington Ingalls. They're made by General Dynamics. The current ballistic missile submarines that we use are some 30-plus years old. They really need to be rejuvenated. Some of the delivery mechanism, another delivery mechanism for both conventional and nuclear arms are bombers. A lot of the bombers in our fleet are approaching 50 years old and more. They're the B-52s that were made in Vietnam and post-Vietnam. So I think the Trump administration would probably look to rejuvenate that fleet. In fact, that effort has already started under Barack Obama as we awarded a new bomber contract. So there's a lot of platforms like that that really need to be rejuvenated. Again, Air Force, Navy platforms that need to be rejuvenated are quite old, and I think that's where the spending will be put.
George, the type of weaponry that you are talking about is more sort of traditional. As you say, it needs to be rejuvenated. Of course, the conflicts that the U.S. is facing now are quite different from traditional conflicts. Are there companies you cover that have products in those sort of newer kinds of warfare areas where we could potentially see spending and maybe could benefit as well?
Sorry, so when you say newer areas, you mean?
I mean, if you're talking about
maybe technology, even
technology, intelligence. You're talking about not sort of traditional wars where armies are clashing on various fronts.
So I would say one of the interesting things about this is all of the companies that we cover, the defense primes, Boeing, Lockheed, Northrop, Raytheon, they're all on the technology edge of those businesses. They all have stuff that works in the intel side of those businesses. But remember, you get a lot more employment on those bigger programs. And so that's one of the other things here I think we need to remember. I think Donald Trump wants to look strong in defense. He also would like an employment driver. Both would do a lot for his presidency. And so he's going to like some of those big programs, rejuvenate them. They employ a lot of people. Unfortunately, you don't spend a lot of money on some of that other stuff like intel programs and drones and such like that. They're not big ticket items, and so less employment involved. And if you remember, sort of, if he's a Reagan-esque type of leader, Reagan built all these big platforms, never really engage the enemy with those platforms. And so I think what you have is, again, that employment benefit, and you're not looking to necessarily engage.
That's a good
You're
point.
looking to be strong.
Alex, to follow up on what George was saying, Donald Trump wants to look strong on defense. We talk a little bit about the bigger and more elaborate defense weapon systems, all of that, the systems. But in terms of personnel, are we looking at a larger Navy, a larger Army, more people in the Marine Corps?
Yeah, you know, George makes a good point that a lot of our big-ticket weapons, our subs and ships and planes are old. But there's no country on Earth, or even any combination of countries, that can challenge the U.S. In conventional warfare or in nuclear warfare. Where we have problems is what Julie was talking about, asymmetric warfare, guerrilla war, and you know, Russia sending little green men into neighboring countries who don't wear uniforms with insignia, and all of a sudden Crimea is taken over by Russia in just overnight, practically. These are the places where we're lagging behind, and I don't see investments that Trump is calling for that would solve that problem.
All right, good stuff. George Ferguson, senior defense analyst for Bloomberg Intelligence, and of course, Alex Wayne, our White House editor for Bloomberg News. Thank you so much, gentlemen.
And coming up, Turing Pharma founder Martin Shkreli speaks out on the drug pricing debate, saying that despite the backlash, he'd do it again. This is Bloomberg. What'd you miss? Martin Shkreli, the founder of Turing Pharmaceuticals, gained notoriety for buying an obscure drug named Daraprim and raising the price by 56 times. Then he refused to answer questions before Congress. He later tweeted that lawmakers were, quote, imbeciles. Martin Shkreli joined David Weston and John Farrow this morning on Bloomberg Daybreak Americas and talked about how his controversial price hikes played a role in this year's presidential election.
When you're caught in the perfect storm of political season, you know, it's easy to become a target for unwarranted, I think, aggression. And if you look back, one of the things that I noticed as I look back is that the President Obama and his administration said absolutely nothing about drug prices throughout the entire period. And I asked one of the people in his camp, why is he staying silent on this? Why isn't Joe Biden saying something? Why isn't President Obama saying something? He said very curtly, they're not running. And, you know, so it's really a populist issue, and I think was blown out of proportion. And so in terms of regret, I think maybe not you know, seeing that as acutely would have been a minor regret, but because the price increase has stuck, so to speak, I don't really. That's the main mission, was to raise the price and have it generate increased revenue. That's happened. So I'm happy with respect to that.
So apart from the politics, and perhaps in business you can never put it entirely apart from the politics, as you learned, but apart from the politics, in the end, did it benefit the investors in your company, in Turing, the way that you handled this? Would you have made more money for your investors if you had not raised it as fast, not been as public?
In that sense, it was difficult to sort of do anything. In terms of the investors, from a cash flow perspective, it makes no difference. In fact, you're better off raising it faster, I think. From the perspective of things like multiples and exit opportunities and brand name and things like that, there's certainly some damage done. Again, I think it was somewhat unexpected. When I ran Retrophin, I raised the price of a drug 20-fold, and there wasn't any stories about it.
How do you pitch what seems to me an ideological pursuit to be the poster boy of capitalism versus actually running a company and having to go against DC, which you have to kind of negotiate and dance around to have a successful company? Can you do both, be the CEO of a company in this country and be the poster boy of capitalism?
It's hard, isn't it? I mean, in your prior segment, we were talking about all these criminal charges against banks.
Yeah.
And, we have an administration that's very thuggish and bullyish when it comes to companies. They look at them as targets, and people as well, as targets to shake down, in essence. And actually enforcing justice is not their goal. I think their goal is to make a name for themselves, to extract these billion-dollar settlements. And one has to tread very carefully, and that's why some of the greatest business people have kept the lowest profiles.
And particularly in the pharmaceutical area, because people feel very strongly about their prescription drugs. I mean, regular people, voters out there, which means politicians get involved and government gets involved. So did you actually put Turing to some extent at risk of the government coming in? Because if you push too far on the government and pharmaceuticals, they will come down on you hard.
Absolutely. And learning at a young age that, the government in many ways is an apparatus of vengeance, and to be a little cynical about it is frustrating. At the same time, nobody talks about sparsentan, the drug that I in-licensed, which was on the shelf at Bristol Myers Squibb. In-licensed, it just hit its primary endpoint in a phase 3 trial for focal segmental glomerulosclerosis, a trial I planned with NYU. Nobody talks about that. Nobody talks about the new chemical entities I put into the clinic. We like to talk about one, basically insignificant drug at the end of the day relative to larger drugs in the pharmaceutical.
Well, let's talk about something a lot of people are talking about, and it's the Trump presidency.
Yeah.
You've brought up the issue of populism and how drug pricing became a populist issue. Do you think Donald Trump makes it a populist issue as well?
I think that the media made it a populist issue. If you look at the Proposition California that people wanted to pass to lower drug prices, they even ran an ad with my face on it in during the World Series, which was, my family was shocked to see, and the proposition failed. And this is one of the most progressive, sort of liberal countries, states in the country. The proposition failed by majority vote.
You say the media made it an issue, and I always love it when people come on the show and say that. Hillary Clinton was running. She tweeted about it.
She's an apparatus of the media.
Bernie Sanders thought
he's also an apparatus of the media.
An apparatus of the media, using the media to get their message across, because that's what people do, and the media's here
it's no secret
to be an ideas exchange.
It's no secret that the media plays favorites.
Well, but
I wouldn't go as far as that much.
Okay, whatever.
But Martin, do you have it the right way around? I mean, to some extent, the media and politicians follow where the people are. And you said it was insignificant. It was insignificant not to the people who needed to take it. It was terribly important. If you have people out there who don't have a lot of money and they need to take a drug like Daraprim, there's going to be consequences, and that's just not the media concocting.
There isn't consequences. They have insurance. I don't know if you're familiar with healthcare insurance.
I've heard of it. Yes, thank you.
90% of Americans have it. Our president forced us to get it, I think. Do you remember that? Because I paid a fine because I don't have healthcare insurance. I actually had to pay the IRS a fine for not having healthcare insurance.
Well, your health insurance must be really great, because a lot of people's healthcare insurance actually doesn't cover 100% of the cost.
As far as I know, Daraprim is covered by every major insurer. But with respect to what we were talking about earlier, I ultimately think that Trump's going to be a fantastic president. He's going to bring more competition for drug prices. He's going to solve it in a capitalist way. Right now, getting a generic drug approved takes 5 years.
So this is the problem. So let's go back to capitalism, because the ultimate problem is that for the healthcare industry, it's almost seen as monopolistic because it's so hard to get drugs through the FDA. So you think that is going to solve that solution, that problem?
Drugs are a small... Go ahead.
Beyond that, my question would be the pricing issue. It's going to get a whole lot harder to lift your prices if they do address that, isn't it?
Well, I'd start by saying that drug pricing is only a small part of healthcare expenditures. Physicians are the biggest part. We don't talk about physicians. Their prices are rising as fast or faster than drug prices, as are hospital and medical device companies. So we want to pick on drug companies, but drugs are actually the best cost-effective solution for healthcare. They're algorithmic. anatomic, they're very modular, whereas expansive things like how do you do a surgery or something, it's very much more complex and harder to control.
Well, that's very fair, and we should have some healthcare providers come in here and defend themselves. But right now, let's talk about drugs.
Yeah.
And there's no question that the price of drugs is going up faster than the cost of living. And
yes, it is.
And that as a percentage of GDP in this country, healthcare costs are, what, 18%, something like that, moving toward 20%?
Absolutely.
Much higher than any other developed country. When you have, for example, the health insurers pay really high prices, that gets expressed through premiums sooner or later. It doesn't just go away.
Of course it does. And so the question is, as GDPs grow, and we're at the top of that pack, right? We're the leader.
By a long shot.
I think what happens is that we learn as a society that what we prize in life is our health. And we're going to spend more and more on our health than ever before. And that's a good thing. I think it's a mark of a civilized country.
So you do it again?
Of course. Shareholders, and in fact, you've seen Valiant, was castigated for their price increases. They raised prices after the Senate committee. Pfizer raised prices of Viagra 13%. I look at Bloomberg for inflation. I don't see anywhere where they need to keep up with 13% inflation. So it's not like I'm surprising in saying I'd do it again. Everybody's doing it. In capitalism, you try to get the highest price that you can for a product.
I'm Scarlet Fu. What'd you miss? A mortgage rate spike. The sell-off in bonds and backup in yields means that home loans are getting more expensive. And what we've seen in the last 6 weeks is the fixed 30-year rate mortgage has gone up almost 75 basis points. The last time we saw a move like that steep in that short amount of time, was back in June of 2013. And back then, we saw homeowners jump in, or home buyers jump in, and pushed home sales up by about 19%. So what happened afterwards? You saw this big dive. That's the blue line there, and home sales plunged afterwards. So if you look at what happened today, we did get new home sales, and that jumped 5.2%. Perhaps this is the peak before the decline. It's something we'll be watching for in the data in the coming months.
Yeah, as you pull those sales forward, as people act a little quicker than they might have. I'm taking a look at Mexico because today we got the Mexican trade balance numbers, and Mexico reported an unexpected surplus, trade surplus of $200.4 million. That's the white line here. Zero is pretty close to the top here, the zero line. So going above that shows a surplus. $900 million deficit was the forecast from economists. None of them actually had predicted a surplus. So what changed? the peso, of course. Here's the peso. I've inverted it to show the peso's drop versus the U.S. dollar, which has been about 17% this year. That drop in the peso caused an export gain of 10% in November to the highest since October of 2015. So it's interesting here, even as we see this rhetoric about tariffs perhaps from abroad, about potentially talk about trade wars with various countries, that the drop in the peso has actually created at least one benefit for Mexico thus far.
Right, absolutely. It's also helped, of course, by oil prices stabilizing and moving higher potentially in the months to come as well.
Indeed.
So be on the watch out for that. All right, the market close is next. Take a look at the major indexes with less than 4 minutes to go before the close. As it's been all session long, little change here, slightly to the upside. The Dow up by almost 12 points, the S&P 500 gaining 2 points. From New York, this is Bloomberg. Moments away from the closing bell. What'd you miss? Stocks, bonds, and currencies locked in narrow trading ranges as volume continues to thin out ahead of the holidays. I'm Scarlet Fu.
And I'm Julie Hyman. Welcome to our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. Fairly sleepy in terms of equities and how they're performing today. So let's move to a couple of sectors where we saw interesting moves. I want to begin with European banks, of course, because Deutsche Bank and Credit Suisse both in the news, making headlines after they agreed to settlements with the Department of Justice on sales of bad debt. They are paying a combined $12.5 billion to Uncle Sam. We also see Italian banks gaining as well after the Italian government agreed overnight to pump 20 billion euros into its banks. And a quick check here here on the Bloomberg, just to give you a sense of here back in the U.S. how quiet it was. This is the Dow Jones Industrial Average and the tight trading range that we've seen today. It was a 30-point move in the Dow from peak to trough intraday. That is tiny. In fact, it is the lowest range since December of 2013. And if you want to see, or you want to get a sense of just how thin the trading was, this week the Dow moved on average 55 points from peak to trough. So far this year, that is the blue horizontal line. That was a 165-point swing. So today, a swing, if you can call it that, of 30 points.
Can we just acknowledge that amazing pun? Doubtful.
Doubtful. Thank you for Dan Curtis for that one. Yes.
Love it.
Love it, Dan. All right. In terms of weekly performance, you're looking there at gains all around. For the Dow, by the way, this marks the 7th straight weekly gain, the longest stretch of gains since 2014, December of 2014.
And let's take a look at what happened in the bond market. Today, little change here. We got a little bit of selling on the shorter end of the curve, tiny amount of buying on the longer end of the curve. But here, too, it is the weekly move that is perhaps more interesting. A drop in yields, increase in price. Take a look at the Bloomberg #BTV4927 gives you the weekly change in the 10-year note here. You see the election, which saw that big spike in yield, selling in price. So this is the first week since the election that we've actually seen a drop in yields here. Of course, difficult to see if it's a bigger reversal because the volume is so low this week.
And in currencies, commodity currencies dropped after Chinese President Xi Jinping indicated he is open to the idea of GDP falling below 6.5%. Because he says if doing so creates too much risk, then we don't necessarily have to do that. You saw the Aussie, the Kiwi sell off. Aussie at a 7-month low, Kiwi at its weakest since June. The Canadian dollar also trading above 135, way down as well after the third quarter GDP out of Canada unexpectedly declined.
And we're also taking a look at commodities right now, oil prices, as we continue to get Libya back online with some of its production here. You've got crude oil prices up by 1/10%. But I want to show one of the charts that has been one of my favorites consistently throughout the year. This looks at crude supplies in the United States, seasonally adjusted,
nice
kind of where they've been over the past few years. So the top line here is 2016, the following line 2015, and then the other few years preceding that. So crude supplies are still well above the seasonally adjusted average here. So here in the United States, we still got a lot of crude out there to work down.
Great context.
Also taking a look at gold prices, continue to see that losing streak for gold. There's the 1-week chart down 0.4%. So there, at least, we did not see a reversal of recent trends.
All right, those are today's market minutes. We want to take a deep dive now into the Bloomberg. You can find all these charts or using the function at the bottom of the screen. And we know, of course, that Donald Trump's election accelerated an exit of funds out of the EMs. But just how much money left countries like India or the Philippines? You can find it all at WFII Go on the Bloomberg, and it's a home for all the tickers that track foreign portfolio flows in and out of fixed income and equity. We're going to start with equity here and sort by quarter to date. And what you see here is India at the very top. So we're going to click on that, and you can see if you change the date to 11/8/2016, what's happened is that India has seen the biggest net outflows, more than $3 billion pulled out from its equity market. Pretty remarkable. If you go to the bond tab here, you can see the same thing. India has also seen quite a bit of money come out there. And again, we're going to change the date to 11/8/2016. And there you go. India has seen almost $6 billion of net outflows out of its bond market since the U.S. election. I'm not trying to pick on India here, too. So let's just also show you another country. We've also seen Thailand and Malaysia and Indonesia also see outflows so far this quarter. And going back to equity, one market that has seen inflows, net inflows, is South Korea. And here, let's click on this one just to give you a sense and start the date line at 11/8/2016. And you can see quite a bit of nice rise. Certainly in the days after the election, 11/15 is when the bottom was. And then we saw money coming into, on a net basis, South Korean stocks. So it's a great function for you to check all these different countries and to quantify the amount of money moving in and out.
Yeah, really interesting because we have seen a lot of debate about emerging markets in the wake of the election and whether they would be a good buy or not, and people trying to, of course, not put them all in one basket.
Exactly.
Differentiate. Try and suss out which countries might perform better than others. I'm going to get back to one of those top stories that we've been watching today about this settlement between Credit Suisse and Deutsche Bank and the U.S. Government over MBS abuses here. This is the estimated Basel III Tier 1 capital equity ratio. Thanks to Allison Williams and Bloomberg Intelligence for helping us to take a look at these numbers. So the concern here, of course, with Deutsche Bank is that if it had to pay too high of a settlement, that it then would be forced to raise capital.
Yes.
Because its Tier 1 capital ratio in the purple line here is lower than many of its competitor banks. That debate is not over, but it did seem to be something of a relief today that it did have that settlement.
And, of course, that relief, certainly, but the fundamentals don't change all that much for Deutsche Bank either.
Right, exactly. And that is now what we're going to be talking about. Closing a chapter in this major dispute, Deutsche Bank and Credit Suisse agreeing to pay a total between them of about $12.5 billion to end U.S. investigations into their dealings in mortgage-backed securities. But just as Deutsche and Credit Suisse settle, Barclays is bracing for a court fight. For more, let's bring in Yalman Onaran. He is senior writer for Bloomberg News. So this has been going on now for quite some time. It's been this overhang for these companies. How much of a relief is it that now that they've settled?
I mean, the biggest fear was in the markets was Deutsche Bank, because you showed the chart just now. You know, their capital ratios aren't great. Their leverage ratio, which a lot of investors also pay attention to, that's more recent for European lenders, that they have to calculate that and abide by the rules, is even worse. It's the lowest really among all the big European banks. So it was investors were really scared that if the fine came at $10 billion or something, because the negotiations started with very high numbers, 15 billion. So everybody knew it was going to go down from that, but how much down? And the headline number is 7-something, but it's really much smaller. The fine portion is only $3.1 billion. They had provisioned about 2 of that already, $2 billion.
Wait, so what now? The fine is actually smaller?
The fine is smaller because with all these settled, almost all except Morgan Stanley, there's a cash fine, and then there's consumer relief for all the homeowners whose mortgages were packaged into this crap, which were sold to investors.
So do they pay it directly to the consumers?
That one, it's not even paying money. It's restructuring your mortgage. It's giving you some relief on your mortgage. Those kind of negotiations already happen. Banks have been doing that, because if you can't pay your mortgage, the bank wants to do something with your mortgage anyway, right? They want to give you a break so you can continue paying instead of defaulting, and then they go grab the house. But, of course, this is a promise to do more of that, and also certainly sometimes reduce the principal. Because banks never want to do that. They don't want to reduce the principal. They'll give you a break on your interest payment. They'll give you
the schedule,
longer payment periods, but they don't want to do the principal. So the mortgage settlement includes big portions for all of the banks, but even bigger for Credit Suisse and Deutsche Bank, that they'll give this kind of consumer relief over the next 5-10 years. So that is not as painful. The real painful part is the $3 billion for Deutsche, even less, $2.6 billion for Credit Suisse. Those are what will cause them to take the losses in the current quarter when they report fourth quarter numbers. Those are much smaller numbers than anyone feared, so they're not going to have to raise capital very likely.
So is Deutsche Bank in the clear? I mean, it's cleared from all DOJ investigations, or are there still things hanging over it?
There's so many things. There's so many things. Nobody can keep track of them. I think we have spreadsheets trying to list all the... There's so much legal stuff. And it's not only Department of Justice. There's UK regulators. There's, FX probes and LIBOR and... I mean, there's so many things that... And it's not only Deutsche, other banks still have more coming, but Deutsche still have to deal with these. And as you were mentioning, that the fundamental story of profitability in Europe, and especially with Deutsche Bank, hasn't gone away. They struggle to make money. Even if they weren't paying fines, they're not really making great profits. So how do you really fix that? I mean, do you get rid of more people? Do you shed some businesses, which they're trying to do? There are restructuring plans all over Europe, but we haven't really seen the results yet. We haven't even seen them actually happening. In Deutsche's case, it's very slow.
Of course, the one we haven't mentioned as much as Barclays, which didn't come to an agreement. What happened there?
Well, there's a lot of speculation, and of course, there's sort of things leaking from the bank, and they're trying to distinguish themselves. Oh, we're different because ours was smaller, it wasn't as bad. It's hard to know whether any of those really are the reason. It's perhaps partly because they thought they were really different. I have a hard time believing that. But still, basically, you can see that they could win time by dragging it longer, not settling now. A new administration comes in. Maybe they won't be as aggressive. Even if they are, okay, you settle it a year, 2 years from now, and that way you've had some time to make some money so you can actually pay these fines.
All right, taking a gamble there. Yalman Onaran, thank you so much. Senior writer for Bloomberg News. Thank you.
Coming up, challenges facing German Chancellor Angela Merkel. We'll talk about her re-election odds in the aftermath of the Berlin terror attack. This is Bloomberg. Let's get to Bloomberg's First Word News this afternoon. The United States has given its biggest rebuke in recent history to longstanding ally Israel, allowing the UN Security Council to condemn its settlements and continuing construction in Palestinian territory as a flagrant violation of international law. Instead of casting a veto to support Israel, as it almost always does on council resolutions on the Israeli-Palestinian conflict, the U.S. abstained. That gave a green light for the council to approve the resolution by a 14-0 vote, a move greeted with loud applause in the packed Security Council chamber. Africa Airways says the men who hijacked its plane wanted to go to Rome but ended up in Malta instead due to fuel limitations. The flight was diverted as it flew from Saba to Tripoli. The hijacking ended peacefully several hours later when the two suspects surrendered to Malta authorities. No one was hurt. And Germany's top prosecutor says investigators are trying to determine whether the suspect in the deadly truck attack on a Berlin Christmas market had help from a network of supporters. Anis Amri, a 24-year-old Tunisian, was shot and killed by police conducting a routine stop in Milan, Italy, after he opened fire on them. The prosecutor, Peter Frank, says his office is working with Italian authorities to reconstruct the route Amri took to get there from Berlin. He says authorities in Milan were able to identify Amri with help from fingerprints provided by German authorities.
Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg. Scarlet?
Thank you so much, Courtney. For more on what's happening in Berlin and how the latest terror attack could derail German Chancellor Angela Merkel's re-election campaign this year or next year, I should say, is European political analyst Nina Schick, who joins us now via Skype from Cologne, Germany. Nina, following the Berlin attack and all the noises made about how Angela Merkel's policy towards migrants probably contributed to that, it feels like she is more vulnerable than she has been in many, many years. The far-right party AfD certainly gets the headlines, but there are attacks coming from the left as well. Do you anticipate Merkel will have to shift one way or another as she defends herself in the new year?
Certainly, Merkel is much more vulnerable than she has been, and this is something that's been going on since the migration crisis started last summer. But I still think it's likely that she will win the election next year, because the left, even though they're attacking Merkel right now, when she announced her migration policy, they actually wanted to go further. And as for the attacks on the right, the AfD, which is this anti-immigration populist right-wing party, whilst they will win seats in the Bundestag, they're still far too toxic to be a mainstream party. None of the other parties will work with the AfD. But it's interesting then to see the criticism within Merkel's own party, the CDU and the CSU, which is her Bavarian sister party. And that's been quite vehement and vocal. And indeed, Merkel, since last summer, has already been pushing through domestically a series of reform to try and crack down on things like deportations. And it's very interesting to see, indeed, that the suspect in this case was actually due to be deported back to Tunisia, but because of logistical reasons, that didn't happen. So certainly Merkel will be coming under a lot of pressure. I think this means her focus primarily in the next few months is going to be domestic and on the security angle.
Well, and what kind of promises are we getting from not just Merkel, because it wasn't just a breakdown, right, in Germany, it was a breakdown perhaps in Italy as well, where the suspect was before. He was set to be deported from Italy in the past as well. He has a criminal history, etc. So are we hearing not just a response from her, but sort of a coordinated response around Europe?
Well, I think that it's very clear. It's a clear indicator that the security systems with the Schengen zone in Europe are very much under strain, and this is something that's been apparent since last year. And whilst we haven't seen a coordinated response from the EU as of yet, I'm sure that this is something that they're going to be looking into. However, this is not an isolated incident. This has been happening, of course, as we know, in Paris, in Brussels, and now in Germany. So the EU certainly has to step up its game. The people who are profiting from this right now are the kind of populist far-right movements that are across Europe, who have been saying that this is another indicator that the Schengen border-free zone within the European Union doesn't work, and that the EU's border security is certainly not safe. And there's certainly some truth to that when you consider what's happened in the last year.
Right, and I want to pick up on that point, because there is truth to that idea that you can't secure the borders completely in a Schengen open area zone. Do you see the AfD, which you said is still far too toxic for the majority of Germans, do you see it toning down its rhetoric to appeal to more people?
I doubt that the AfD will tone down its rhetoric, because it initially was a party that was opposed to Germany's Eurozone policy, and then the bailout policy specifically, and then it was hijacked by a more extremist right wing, and that has been their entire cause. And, it was a party that looked like it was decimated until the migration crisis started, and that's when it started to really rise in the polls. Now, interestingly, it's polling at about 10 to 15% nationally, but I think there might be, when it actually comes to the elections, they might win a bigger share of the vote than that. But the key thing to remember is still that none of the other parties will work with the AfD. So there will be an isolated voice in the Bundestag. But in the German context, nonetheless, the fact that they can even enter the Bundestag will be seen as a political revolution, really.
And in France, of course, we already have seen a little bit more strength from the right-wing party there and Marine Le Pen. At the same time, she is struggling to raise the 20 million euros she needs to fund a campaign. Do incidents like we saw in Germany change that calculus at all?
Good question.
Absolutely. And I think that, incidents such as this, if you look at who's been very vocal about it, it's Marine Le Pen, the leader of Front National, UKIP's leader in the UK, Nigel Farage. And it certainly adds to the feeling of insecurity and terror that we've been seeing sweeping across the European continent since last summer. And this is what happened in Berlin is really a microcosm of something greater that's happening across the European continent. And that's how to deal with the migration crisis, because, of course, it still hasn't stopped. And with recent atrocities and civilian deaths in Syria, this is a trend that looks to continue and has been continuing this year. And also the threat of extremism, and not only extremism amongst migrants or refugees or asylum seekers, but also homegrown terrorism. And this is something that the EU as a whole really hasn't had a sufficient answer to thus far.
Give us an update on the migration and the migrant issue. Are there any new ideas being proposed? Is the far left coming up with a better idea? Are the centrist leaders coming up with new novel prescriptions, or is it kind of the same conversation, the same debate churning over and over again?
Well, the interesting thing is that after Merkel suspended the Dublin rules last year and said that, if you make it to Germany and you're an asylum seeker, we will give you safe refuge, she actually orchestrated the linchpin of what's been the EU strategy in dealing with this. And that is a deal that they struck with Turkey so that any migrants that come to Europe will be then taken back to Turkey. And from Turkey, the EU will take refugees that are vetted into the country. And then the second part of that idea, again, pushed by Merkel, was this idea that refugees and asylum seekers would be equally distributed around the EU. Now, that's something that is completely stalled. The Eastern and Central European countries refuse to take part. So really, we are seeing a continuation, even though it's not so much in the headlines, a dire situation where migrants are stuck in Italy and Greece. And this is not something that the EU has been able to resolve. Neither does it look like it will be able to. And the center-left parties certainly haven't come up with a good answer either.
All right. Certainly an issue we'll be watching for in 2017. Nina Schick, thank you so much. European political commentator and consultant specializing in EU policy and German politics.
Coming up, we're going to take a little bit of a deep breath in our deep dive, go a little bit lighter. Let your Christmas shopping to the last day, perhaps. You may be dishing out more cash this year. This is Bloomberg.
I'm Scarlet Fu. What'd you miss? We're going to take a deep dive now into the Bloomberg. You can find our charts using the function at the bottom of the screen. And we want to go with a holiday-themed deep dive here. So this has to do with Christmas trees because Canada is one of the world's top Christmas tree exporters. And in 2015, the white line there shows that shipments of Canadian trees jumped 12%, ending a 3-year decline. Analysts are looking for shipments to rise this year. And of course, that doesn't show up on this chart yet, thanks in part to the weak loonie. And you can see there the yellow line showing dollar Canada. When the line goes up, the U.S. dollar is appreciating in value versus the loonie. I did some research, Julie. About 40 million Christmas trees are cut every year in North America. Of that, 3 to 6 million are from Canada. So that's a 15% market share. So there's room to grow that. Canada exports about half of its total Xmas tree harvest, and mostly to the U.S., but also to the Caribbean and also to Mexico.
You know what I've been wondering as I walk around New York City and see all the guys in the little kiosks selling the Christmas trees on the street? I wonder how many go unsold.
That's
as
sad.
Of Christmas.
That reminds me of Charlie Brown.
Because, like, as I walk by, there are still trees there.
Yeah.
And we're only a couple days away.
Yeah.
I wonder if they have a sale, a fire sale of Christmas
There are
trees.
always people who buy at the last minute. We know that.
Yes. Let's talk about what people are buying. If you follow the famous song, The 12 Days of Christmas, there is an index of these various prices, yes, put together by the Pittsburgh National Corporation in 1984. Many thanks to Courtney Collins, who highlighted this chart earlier, and I loved it so much I had to bring it back. What's interesting here is that swans a-swimming are really expensive.
What's going on there?
$13,000 for 7 swans.
That's the green part of the bar, right?
That's the green part of the bar there. And even though it is quite expensive, it has remained relatively steady. There was a dip in swan pricing in the 90s. As I joked earlier, it was the great swan glut of 1995, and then has come back up again. And what you've seen overall is the birds overall between the swans and the geese, 7% more expensive today than in 84. Unskilled labor, those 8 maids of milking, 116% more expensive. And skilled labor, which you can say is the ladies dancing, the lords a leaping, the pipers piping, the drummers drumming. I'm not sure what. Yeah. Anyway, 290% more expensive. Right?
I would argue, the maids would argue that milking is a skilled labor.
I would say you got to learn how to milk.
Yeah, not anyone can just step into that role and do it.
Although, don't you have milking machines at this?
Automation. That brings up a whole nother.
I got to do a little more research into this index here.
All right, to be continued. Coming up next, it's been a banner year for Bitcoin, but is it sustainable? Some analysis and the outlook for the cryptocurrency next. This is Bloomberg.
let's get to Bloomberg's First Word News this afternoon. German Chancellor Angela Merkel says she told Tunisia's president that the deportations of Tunisians who aren't entitled to residency in Germany needs to be stepped up. Merkel spoke with the president just hours after the death in Italy of Anis Amri, the chief suspect in the Berlin truck attack. He was a Tunisian who had been denied asylum, but Germany was unable to deport him. The UN says the humanitarian evacuation of eastern Aleppo has concluded, with more than 35,000 people transported out of the city. More than 23,000 evacuees have arrived at UN reception centers, but UN officials note that 700,000 Syrian civilians are still trapped across parts of the war-ravaged country with no access to humanitarian aid. Several members of Congress are seeking reimbursement from the government for protecting President-elect Donald Trump at his Florida resort. That's according to a report in The Hill. The Florida lawmakers sent a letter to Attorney General Loretta Lynch and Homeland Security Secretary Jed Johnson requesting the funds for Palm Beach County. A county official told the lawmakers that protecting Trump for 4 days during the Thanksgiving holiday cost $250,000. And there's a major breakthrough in the battle against Ebola with an experimental vaccine that provides 100% protection. It could help prevent the spread of outbreaks like the one that killed thousands in West Africa. Scientists have struggled to develop an Ebola vaccine over the years, and this is the first one proven to work. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg. Scarlet?
Thank you so much, Courtney. Let's get a recap of today's market action. We limped into the close. The Dow moved all of 30 points intraday from peak to trough, and it closed up 15 points. Still can't get to 20,000. I mean, we got to within 15 points this week. We did, and for the Dow, 7 weeks of gains, or we extended our weekly gains to 7 weeks, I should say, but can't get to that 20,000.
Can't quite get there.
All right, well, we'll continue to keep watch for it. One thing that has been moving, though, was Bitcoin. What'd you miss? 2016, the year of rising geopolitical risk and uncertainty, and it is Bitcoin that is reaping some of those benefits as demand is boosted for alternative assets. The digital currency is extending a rally that put it ahead of gold, major currencies, and the S&P 500 this year. Here to talk now about Bitcoin's banner year and what lies ahead is Gil Loria. He's the Director of Research for Wedbush Securities, and he joins us now from Los Angeles. So it is rather amazing, Gil, that Bitcoin has outperformed all these other assets, every major currency, stock index, and commodity contract in 2016. When people hold Bitcoin, do they usually hold it for the long term, or are they going in and out of it because they want to get out of a currency like the Chinese yuan and use Bitcoin as a way out of that before they move it into another hard currency?
It's both. Any type of restriction on the movement of money creates an incentive to use Bitcoin. Remember, Bitcoin is a peer-to-peer network for digital cash that is very efficient to use, can go cross-border, and it can do so with very little, with very few intermediaries. Any type of restriction, capital flows from China, the elimination of cash in India, threats on remittance between the US and Mexico, anything like that creates an incentive for people to use Bitcoin. And as the market for Bitcoin starts discounting that back, there's more and more of a sense for what the importance of Bitcoin can have in a world that has more borders, more firm borders, more conflict between countries, and more limitations on how people can move money.
And Gil, it's also seen much like gold, sort of as a haven, if you will, in times of geopolitical risk. We have a chart here of gold versus Bitcoin, and particularly since the election, we have seen people sell gold, but they haven't been selling Bitcoin. Really fascinating here. And in fact, the gold premium to Bitcoin is at a 3-year low. How much of the buying here, you say that there are various reasons, obviously, that people buy Bitcoin. What sort of, how big a factor is this desire for a haven?
Well, what I would say, it's a desire for an asset that's not correlated to other assets, with real estate and equities and sometimes even fixed income moving in unison in the economy. It's very hard to put assets in something that's not correlated and can preserve value or move in a way that's independent. Bitcoin is that. It is uncorrelated with any of those other assets. That's the advantage. That's an advantage that gold used to have, but Bitcoin is far more fluid. You can feel much closer ownership of that asset, and that's working. But calling it a safe haven is taking maybe a step a little too far because it's a commodity. It trades like oil. Just like oil went from 150 to 30 to 100 to 40, Bitcoin has gone up to 1,100 to 200, back to 900 now. It's not a safe haven in that your principal isn't secure, but there is a huge advantage to owning an asset that's not correlated to everything else you have in the portfolio.
Well, but Gil, as you say, isn't that also a disadvantage because it can go from 150 to 30 to 150, because it is so volatile?
It trades like a commodity, and you got to remember that just like oil does that and gold does that and copper, it trades like that, and that's why it's not a safe investment by any stretch of the imagination, but the upside is tremendous. If Bitcoin takes off and is used for remittance and for surfing without advertising and as a bank account for emerging markets and for online shopping, it could rise in price to a multiple of where it's at today. So there's a tremendous amount of upside, but it trades like a commodity, and there's a tremendous amount of volatility that comes with that.
You talked about how there isn't really a correlation between Bitcoin and some of the other asset classes. There is an inverse correlation, though, with the Chinese yuan, and we have that charted here on G#BTV4202. The white line is, of course, Bitcoin, and there's that leg higher after the U.S. election, and the blue line is the Chinese yuan, although we've inverted it so that you can see that when the line goes down, the Chinese yuan is losing value. China, obviously, a popular destination for Bitcoin and popular host of Bitcoin as well, because people are trying to get around these capital controls. Can you give us a sense of the evolution of Bitcoin, the practical use of Bitcoin in China? Are people able to use it more for transactions as they store more and more of their savings in Bitcoin?
So the top two drivers, I would say, of the ascent of Bitcoin prices are Chinese capital controls and Chinese speculation. It's not necessarily used for transactions inside of China. It's used for allowing people to move their wealth from inside of China to outside of China in ways that the Chinese government may not allow otherwise. That's a huge usage. The other usage is speculation. It's a market that trades 24 hours a day, is incredibly fluid. You can go in and out at very small transaction cost. And so there's a tremendous amount of speculation. A lot of it is happening in China. And so that's a lot of what the activity is in Bitcoin in general, a lot of what's driven the price up. It's going forward that may happen in other places that have capital controls, that have trade restrictions. But for now, China is the big driver of Bitcoin.
Do you see more research being done on Bitcoin in China? Are there projections for where Bitcoin might be headed from analysts inside China?
I don't know that I've seen a lot of that. Again, a lot more of this is speculation. A lot of it is the utility of being able to get money out of China, and a lot of it is speculation, just like speculation on any other asset in China, which, as we know, is very prevalent. This is just an asset that moves a lot. It's very fluid. It's very liquid. It's very easy to get in and out of, and so it encourages people to bid it up more and more. I don't know that there's a lot of fundamental analysis done in China to predict where the price is going to go.
I'm curious, Gil, also, when we talk about it being used for remittances or payments of any kind, how accessible is Bitcoin? In other words, if you're someone who's working abroad, for example, I mean, for you and me, for regular people, or is it sort of the technorati who are using Bitcoin?
So for now, mostly technology-oriented early adopters are driving the adoption of Bitcoin. Think of it 20 years ago, AOL was really the only main access to the internet. And then there were people that were very proficient with the tools of the internet and were able to do a lot more with it. That's probably where we are now. So only early adopters really know how to use Bitcoin with most fluency. But already those AOL equivalent tools, think of Coinbase. You can move money cross borders for less than 1%, where with Western Union that could be 5 or 10%. So those tools are already advantageous. The real adoption, the real hockey stick is going to happen when we're going to get our Netscape moment and our Amazon moment, not to mention our Google and Facebook moments where the adoption is going to be very rapid because the tools are just going to make it so easy to move money, and it's going to be so inexpensive that people will gravitate to that over their current financial system that they're in, the financial institutions that they're partnering with right now.
All right, Gil Loria, thank you so much. Wedbush Securities Director of Research joining us from Los Angeles.
I always miss Matt Miller when we're talking about Bitcoin.
I know, I was thinking the same thing.
He's kind of our in-house Bitcoin aficionado.
A couple years ago, Matt Miller actually tried to live life using Bitcoin. It was like the 12 days of Bitcoin with Matt Miller. And he actually got quite a bit done, right? I mean, he explained how he used a Bitcoin wallet.
He was able to use it for quite a few things.
He actually, there was a couple of transactions as well. So it's all available on Bloomberg.com.
Yeah. And coming up next, something else he'd be into, trucks versus cars. We've got your 2017 auto outlook with Bloomberg Intelligence. That's next. This is Bloomberg. What'd you miss? Bloomberg Intelligence has released its 2017 outlook. Each day this week, we're taking a look at what you can't miss in various sectors for next year. Today, we're looking at autos. And joining us now is Bloomberg senior auto analyst Kevin Tynan. Kevin, let's start with trucks. Really fascinating here because a few years ago, SUVs, like trucks, were sort of persona non grata because of what we were seeing with gasoline prices. Gas prices came down, SUV sales went right back up again. Is that the trend we're seeing, and is it going to continue?
It is, and it is going to continue, but what's interesting right now is that it's not about gasoline prices anymore. What is a truck today, and that would include crossovers and SUVs and pickup trucks, when we look at it, are very different than what they were in 2008, which is the last time gasoline prices spiked. But if you look at the chart of segment mix, truck versus car, it's very dramatic, it's very prolonged, and it's not going to reverse, I believe, regardless of the gasoline price.
So if it's not gas prices specifically that's driving the interest in trucks or truck-like vehicles, what is it? The safety component, the idea that we Americans just love a lot of space?
Yeah, and it's partially that. There's also a lot of new technology. People like the higher ride height in a lot of cases, even the smallest of crossovers, you're getting all-wheel drive as an option. They're easier to load things, including people, in and out of. So being built on car platforms in a lot of cases, the drive dynamics are much better than they used to be. They're quite car-like, and fuel economy is very comparable as well, which is why we would say there's really no reason to trade back to something smaller, lower to the ground, regardless of where gasoline prices were to go.
Just quickly here, a quick follow-up question on that. We just looked at this chart that showed that a much higher percentage of sales right now are light trucks versus cars. When are we going to get to the point on the road where there are more cars, or more trucks than cars? Or are we at that point already?
Oh, yeah, we're way past that. 60% truck for 2016, which is about where the year will end, and it'll be the highest ever. And if you look at that chart that you had up there, those two vertical red bars are the recessions, and even the period in between there was a lot of truck demand. So basically, barring some government intervention, which that one spike is cash for clunkers, the one right prior to it was the spike in gasoline prices. In the U.S., we've wanted to buy trucks all along. Now we've had this sort of period of freedom since 2010, and that's what the consumer has been doing, is buying trucks.
What about electric vehicles? I mean, that there's been a lot of hype around that, certainly. I'm thinking of the Chevy Volt, Tesla, various cars, but is volume going to increase in a meaningful way? Is it going to be a case where one day we'll see as many electric vehicles as trucks on the road?
It's very interesting because there's such a disconnect in what you're seeing automakers announce, the coverage that EVs are getting, including Tesla, relative to where they are in terms of share in the space. So if you look at what we're expecting for December, probably do about 1.6 million vehicles in the U.S. in December, and I would say roughly 50,000 of those would be hybrids, including hybrids, gasoline hybrids, not just plug-ins. Plug-ins will be something about 15,000, 20,000 units relative to 1.6 million of everything else. But you're seeing all the automakers investing in that space, and I think this goes back to the pre-recession period where certain automakers, our domestic automakers, got out of small cars because they were not profitable, which is the case with EVs right now. Right. And then as things shifted, they really didn't have anywhere to go, anything to offer. So automakers don't want to be left behind on EVs when and if they eventually do catch on.
Right. And Kevin, finally, quickly here, there's also the matter of how people are buying their cars. It looks like increasingly they're leasing.
Yeah, leasing will be bigger as more trucks means higher transaction prices, and leasing will create that affordability for the consumer. The thing to watch, though, going forward will be all those off-lease vehicles coming back and depressing prices of new cars.
Very interesting. Bloomberg's Kevin Tynan, thank you so much for giving us your auto outlook for 2017.
Up next, we're going to hear from John Lipsky, the former IMF deputy director, I should say, and now a distinguished scholar at the Kissinger Center for Global Affairs at Johns Hopkins University. That conversation next. This is Bloomberg. What'd you miss? More than 8 years after the financial crisis, Europe's banks are still struggling. The latest threat comes from Italy, with Monte Paschi set to be nationalized. Strengthening the region's banks is not a challenge for the faint-hearted. Earlier today on Bloomberg Daybreak Americas, John Lipsky with the Johns Hopkins School of Advanced International Studies discusses the industry's plight and what it'll take to spur economic growth.
This has been one of the key reasons why growth in the European economy has been so sluggish since the recession. Their banks' balance sheets, and remember, banks account for 80% of credit flows in the Eurozone as opposed to 20% in the United States. When banks' balance sheets are clogged with bad assets, when you have overhang of these kind of large fines like the one we just have been talking about, obviously that doesn't leave banks in a position to be aggressive about lending and helping to spur growth.
Well, John, legacy issues are one thing, and sometimes they're out of your control and outside of your jurisdiction as well, if you're a European regulator. For the European monetary policy makers, the regulators, though, are there some levers they can pull?
Well, they've been pulling. The ECB, the central bank, has been pulling every lever it can think of, to some effect, presumably, but not total success. What is necessary is, for example, with the Italian banks, recapitalization, cleaning bad assets off the balance sheets. That has to happen, and that's happened much more quickly in the U.S., which is one of the reasons why the U.S. has been growing more rapidly.
As you say, John, it's one thing to put lawsuits behind you. It's another to restructure your balance sheet so you can really succeed in the future. That appears to be perhaps what's going to go on in Italy. But when you turn to Deutsche Bank, John Crine, okay, maybe he's taking care of a good part, not all, but a good part of his contingent on legal liabilities. But then the question remains, how does he move forward? Where is the bank going to be successful in the future for that European growth that you talk about?
Of course, that's going to be very important, not just for Deutsche Bank, but for other banks, as well as the project of the EU to create a more vibrant securities market and to have the banks be a smaller part of credit raising in the future.
But John, financial intermediation, and to kind of make that change, is not an overnight story. Draghi can buy a little bit of corporate debt and buy 10% of the market. It doesn't mean that the companies are going to change that cultural habit of going to the banks for loans. How long is that going to take?
It's going to take a while because there's a lot of infrastructure that has to be put in place and grown. Way back in the 80s, the Big Bang in London, American firms moved aggressively, assuming that they would be in the forefront of developing a European-wide securities markets. That's still happening.
So, John, you were an economist. I mean, you were chief economist at Chase as well as being a senior official at IMF. The IMF has been taking down its estimates about global growth pretty consistently for quite a few months now. Are we going to see a change in that now, given the election of Trump, perhaps some growth in Europe that you talk about?
Well, let's hope. The IMF forecast for Europe is actually a bit better next year on the basis of things like the banks getting worked out and other aspects. But they, in general, see the advanced economies moving along essentially at a more or less a steady pace. What's notable is since the Great Recession, since 2008 and 9, growth in the advanced economies has persistently been well below the 30-year average for before that period. So the real problem here is how to spur growth in the advanced economies.
John, there's been this flashing light in the background for global macro over the last decade, maybe even longer, and it's global trade stalling, global trade growth stalling, and now we're hearing increasingly a lot more protectionist rhetoric coming out of campaign trails across the planet in the Western world. Does that concern you a lot?
Of course it does. Just as you say, since World War II, growth in international trade has outstripped growth in GDP. In other words, it's been a leader helping to push growth. Since the Great Recession, it's lagged. Even for the emerging economies, trade has turned into a drag. This is something that I think needs addressing, and needs addressing on a positive and constructive basis. But the principal reason for sluggish growth in the advanced economies, in my view, has been weak business investment. That's been uniform across all advanced economies, including in the United States.
So, John, when it comes to trade, is it possible that we had too much of the not sustainable kind of growth in trade? In this sense, if you go back to Donald Trump's election here in the United States, true in other countries as well, people felt that they weren't really benefiting from this global trade. It was fine for some policymakers in Washington and New York to talk about it, but they weren't benefiting. Do we need to take a fresh look at, you call it fair trade, call it what you want, but growth in trade, but on terms where the the populace really feels they're benefiting.
Well, that's for sure. But remember, the biggest growth in trade imbalances occurred in the 1990s. It wasn't that people didn't notice in the U.S. that we had a record trade deficit, but it was accompanied by strong growth. So back to my point.
Yeah.
Similarly, by the way, inequality in the U.S. economy grew rapidly in the 1980s. But similarly, it wasn't that no one noticed. As long as the overall economy was growing, these problems were at a second plane.
It's what Thatcher always said about the left, is that Thatcher ultimately didn't care about this. She wanted this,
exactly.
Whereas the socialists kind of wanted this.
Well, what we can see for sure, well, I don't know about that, but we can see when the overall growth is slow, these problems seem big.
And that was John Lipsky, distinguished scholar at the Henry Kissinger Center for Global Affairs at Johns Hopkins University.
Coming up, what you need to know to gear up for next week. This is Bloomberg.
What'd you miss on this Friday before Christmas and a three-day weekend? Well, the Dow Jones Industrial Average got closer to 20,000, but not really. It finished up 15 points. In terms of what's happening next week, aside from the holiday, Shinzo Abe, the Prime Minister of Japan, and President Obama will be visiting Pearl Harbor on Tuesday.
Right, that's the first visit by a Japanese Prime Minister, right? And also, in terms of Japanese news, on Monday, Bank of Japan releases minutes of its November policy decision meeting, and Bank of Japan Governor Haruhiko Kuroda will give a speech to the business lobby there in Japan.
And don't miss this. We've got economic data coming up. U.S. wholesale inventories and U.S. jobless claims on Thursday. That will certainly be watched as key measures of the U.S. economy. That does it for What You Missed. Thanks for watching.
Have a great evening and a great holiday.
Courtney Collins, and you're watching Bloomberg Technology. Let's start with a check of your first word news. The United States has given its biggest rebuke in recent history to longstanding ally Israel, allowing the UN Security Council to condemn Israeli settlements and continuing construction in Palestinian territory as a, quote, flagrant violation of international law. Instead of casting a veto in support of Israel, the U.S. abstained. That gave a green light for the Council to approve the resolution unanimously, a move greeted with loud applause in the Security Council chamber. President-elect Donald Trump is reacting to the U.S. abstaining from the UN Security Council vote. Mr. Trump sent out a tweet not long ago after the session concluded, saying, quote, things will be different after January 20th. With the inauguration less than a month away, Jimmy Carter is the only former president to RSVP. Bill Clinton and George W. Bush are putting their decision off until next year, saying